The signals are lining up that the Bitcoin and crypto bull market are effectively over, and you can see it clearly on this chart with the Wyckoff method that is showing that we are likely going to be breaking down into the 90s, into the 70s, into the 50s, into the 40s and beyond. But I'm here to tell you, I don't think the Bitcoin and crypto bull run has yet to begin, and I'm going to show you exactly why. I'm going to dispel some of the charts that you've been seeing and show you what the smart money's looking at and the signal that's going to show when the Bitcoin and crypto mega god candles are going to start to ignite. So let's dive in. Now, before we dive into these charts, drop a comment down below. Do you think the crypto bull market is actually over? Are we going to have a 2026 bear market, or do you think we're going to be pushing to new highs? I'm curious to your thoughts on that, especially after I go through these charts and see if you change your mind. Because when we dive in and understand that the whales are selling, so of course the bull market's over. We see whale selling on each one of these bars here, and it means that it is over, right? Well, when you consider the fact that in all previous cycles, you can see on this chart right here, utilizing on-chain data that gives you a look into the blockchain, every Bitcoin in circulation, how long it's been held, when's the last time it was traded, the wallets that are out there, how much wallets are moving, how much wallets are holding, what is going on. And this chart, the value days destroyed, here on BitcoinMagazinePro.com, you can see on these big red spikes, this is when a huge amount of old Bitcoin are being sold into the strength of this bull run. Essentially, long-term holders selling to the basically exit liquidity, the retail hype buyers that come in. We all know we've gotten zero retail hype in this crypto bull market so far. One of the reasons why I don't think we've actually had a bull market, but there's some confounding data that's going to shock you when I show you. Now, when we look at the previous cycles, all of these tops are loosely tied to where we're getting this massive amount of whale selling coming into these tops. We have not gotten that. We did get it here when we got that run up just before the halving. This was also after those ETFs went live. So there's a kind of a changing of the guard from these old holders into institutional hands. Furthermore, when we dive into this, we see that we have not even had the signal right here that shows you very clearly that the bull market hasn't happened yet. Well, Kelly, what the hell is this chart? This chart is essentially tracking the business cycle. And you notice at the start of each parabola is the bottom of this contraction of the business cycle when this bottoms out and starts moving up. In fact, we got a very parabolic pop, boom, right there on the business cycle that then helped lead into this slingshot of price action going parabolic back here in 2017. Again, right here, right after the COVID crash, that really came into a bottom on the business cycle, bottomed out, started moving up aggressively right here. What did price do? It went sideways, and then the pressure was just too great. What did we do? We went parabolic. So does it have anything to do with the 4-year cycle? Maybe a lot way back here when you're getting 50 Bitcoin per block, but now 3.125 Bitcoin per block, the amount of demand that's coming in, the fact that you can see the business cycle and how it's relating to what's going on in the price action, and the fact that most magically, I might add, we've had an incredible bull run in terms of price action, higher high, higher low, higher high, higher low, in the face of a contracting business cycle. So what will it mean when this does find its bottom? Maybe it's going to be around when the government shutdown ends and we start seeing money getting pumped back into the economy, especially QT is ending. Quantitative easing is supposed to kick back on December 1st as well, already telegraphed by the Fed. So we are near a bottom or coming into bottoming territory. Price has already moved from $15,000 to up over $126,000. We're in about a 18-20% pullback right now. People are losing their minds. This is normal bull market behavior, and yet this is all in the face of the contracting business cycle. So what else are we looking at? Well, first off, on a just basic technical level, each one of these bottoms has been marked with the RSI, the strength, resetting way down here into oversold. Actually, it just means weakness. Very strong, very weak. We get this weak signal, weak signal, weak signal, and then ultimately you see the price, the bulls come in, slingshot it higher. Same thing, weak signal, weak signal, weak signal, slingshot higher from 74 up to $126,000. Here we are, RSI resetting back to the lows again, which is a marvelous thing because this means you have room for not only the price action to run up, but also the RSI, the strength. Price is running up and it's weak. What happens when you get up here and it gets into this peak zone? Gives you that signal you might be cooling off. Now, a couple more things I want to share with you. I know we looked at this chart, but again, there's so many whales selling. Again, nowhere near peak levels that we've seen in previous cycles. And remember, we're seeing a changing of the guard right now between some of these OG 13-year, 12-year, 7-year, big wallet holders from many, many, many moons back, selling, taking some profit, and rightly so. I mean, tens of thousands of percent in profit. They're kind of taking some off the table. And who's scooping this up? Well, these accumulator addresses, this is some other OGs and also new OGs, but also the institutions that have arrived, the Michael Saylors, the Metaplanets, the different countries out there that are stacking. There's so much going on right now in terms of accumulation and also getting prepared to accumulate. And this is also at the same time that we're seeing 1,000% increase. This is a fundamental bullish divergence. Price isn't doing much, but we're seeing 1,000% increase in the transaction or transfer volume for stablecoins on Ethereum since May. This is something I like to see before the price is running away. It might mean you might need to be a little bit more patient, but it is setting up for that slingshot everybody's been waiting on. Furthermore, we have not gotten the signal from the funding rates yet that suggests we have actually hit the bottom on the 1 hour, on the 4 hour. Let's be a little bit patient. What we can look for here is when this green wave you see, this is when everybody's going long, and the more people are going long, the higher this bar is. This means the funding rate is higher. It becomes more expensive to take a 20x leverage trade and hold it open. This allows for the exchanges to try to keep the price action a bit in balance. How the hell can an exchange pay 10,000 people that are on 20x leverage and holding it open for 2 years and they're all 30, 50, $100 million in profit? This is why you have funding rates, to help keep that balance and incentivize people, because shorts are getting paid here while longs have to pay for it. So what we want to see is that capitulation, not just on the fear and greed, but also in the funding rates. When everybody's getting scared, you can also see it in the funding rates when you also get that capitulation mark, when everybody starts flipping, or the majority start flipping into shorts, betting on price going down. Now it becomes expensive to basically take those shorts. We have not got that little red bump yet. We got a little bit of a nudge right here, but I do think we might get one more where people's fears is dashed and everything is just, so that's what I'm looking for kind of a final signal before that move. If the price gets a little bit more scary to the downside, great, watch the funding rate. Now, the last thing I want to share with you, and this is again, the smart money indications that people are looking at, not Fibonacci's, not Wyckoff's, not what is your support and resistance and how can I pull my fib. What we're looking at here is, again, that balance sheet. Remember, quantitative tightening is telegraphed to be ending December 1st. Remember, government shutdown right now is accounting for about 24, 25%, somewhere in that region of America's national GDP. So we have a 25% hole in our economy right now with the government shutdown. There's de-risking in the markets. So what are we looking at here? This is a balance sheet. So we're talking about the Fed funding rate. We're talking about the Treasury. We're talking about everything. All of this is coming into focus in one simple chart. What did we see here in this price action coming to the downside? You start seeing a constriction of the balance sheet, right? Now, what I want you to notice something. The confounding thing about this market cycle is we've had a bull run from 15,000 all the way up to 126,000 in the face of the constriction of the balance sheet. This is like incredibly bullish. The fact that people think we're topping here, I get it. You're looking at the 4-year cycle, but again, I don't want to say dispelled, but there's other reasonings you can look at to why the cycles have played out, like that business cycle. Because when you look back here, this is COVID, the COVID boom, washout, back up. I want you to notice what happens right here in the price action. Now look up here on the balance sheet. What are we seeing here? When I move my mouse across this, watch what's happening with that balance sheet expansion. Right here in the COVID catastrophe. Oh, everything's dead. That's when you get a massive boom, money deployed in markets. What happens? Bitcoin still needs to shake off some of the fear, and then you get that slingshot follows through on Bitcoin's price action. So you see that right here where this is going up. Look at where the line is on the Bitcoin chart. This is stimulating right in the middle of the crash, and then the market finds its base, and then that finds its way into these risk assets. So similarly, Bitcoin's price has gone from $15,000 to over $126,000 in the face of constriction, and the fact that we're still setting up with RSI, in the fact that we have the business cycle suggesting we have the real bull market still on the way. So my question to you after watching this video, do you think that the bull market top is actually in? Or do you think that we're going to see some new highs in 2026? I'm curious to hear your thoughts, and I hope to see you in the next one with bigger bags. Make sure you do what's right for your portfolio. Don't over collateralize yourself. Don't put more in the market that you can afford to lose. The markets are going to chop you out emotionally, but I think this data, when looking at technicals as a suggestion, but looking at the smart money, the on-chain, the business cycle, and the fact that there's so much more to come, I couldn't be more excited. I'll see you all in the next one.